Hi, Hamish Conway here, and welcome to another episode of TACOS Tuesday. And with me today is Jim Vrondas of WorldFirst. Welcome, Jim.
Hi, Hamish.
Excellent. And so while we often talk about, mostly talk about Amazon ads on TACOS Tuesday, there's a really important aspect to the whole business of Amazon, particularly for those brands that are going global. And I know when I started out selling on Amazon back in 2014, it was super difficult in terms of some of the aspects we're going to cover today. But, there's been so many changes in around the fintech space. And for me, what I was looking for, I needed a US bank account, I needed a UK and a Europe bank account. And to do all that sort of thing from Australia and New Zealand, nightmare, right? So this is where you come in. But before we dive into that, I just want to give some context there as to why we're having this conversation. But Jim, look, tell us a bit about yourself and your journey and how you ended up being here at WorldFirst.
Sure. Born in Sydney and grew up in a family of small business owners.
Okay.
So my parents were in the rag trade as dressmakers back in the day, back in the late 70s and 1980s. And so I grew up inside of that family environment where it was all about the business. I've always had a bit of an entrepreneurial spirit in me. I haven't started my own business, but I've got that mindset in terms of helping small business owners, which I'm really passionate about. And so when it came time to start my career, I actually started in financial markets, working for an investment bank, trading foreign exchange.
Yeah.
So that was quite an interesting time in the mid-90s. To actually show my age.
That's a good age.
Yeah. So that was really fun for a young guy. Dealing with foreign exchange world and volatile currency markets, working in an investment bank. But really then moved into payments. And cross-border payments in particular.
Yes.
I joined OFX, number 6 in 2004.
Yeah.
I was really there for 10 years and helped grow that business to listing on the ASX and going global.
Yeah, amazing.
And then moved on to American Express, a different beast altogether.
Yeah.
Still in foreign exchange, international payments, helping business owners with their supplier payments mainly.
Yeah.
And then 3 years ago, I joined WorldFirst as the country manager, leading the evolution of the business across Australia and New Zealand.
Amazing. Such an interesting background, and just understanding the markets and Forex, that's awesome. So you've been a trader forever, right? Even just back then, it was interesting just, reading through on LinkedIn there. We're in interesting times in the world. Yeah. Like, what do you notice? Like, what's going on, and particularly around currency, and what do people need to, what are you noticing anyway?
Yeah, I mean, currency markets are volatile, right? Especially right now.
Yes.
But even at the best of times, right? There are so many things that influence the movement of exchange rates. There's microeconomics at a sort of local market level. There's macroeconomics, and there's politics and geopolitical movements, and of course wars, and tariffs, and all these things that actually create uncertainty in the markets, which then leads to volatility in currencies, which are very, very hard to predict. And I've been, like I said, I started in the mid-90s as a Forex trader, and it's very hard to predict where the currencies are going. And a lot of analysts out there and the banks will put out forecasts. They'll, put their recommendations where they think the currency is going. But as a business owner, making decisions on someone else's forecast is fraught with danger.
Yeah,
because ultimately those decisions you make impact your profit margin and your business. And the banks and the analysts, as new information comes to light, can often change those forecasts quickly. And where does that leave you? Like if the forecast is that the Australian dollar is going to rise, but then you make a decision based on that expectation, and all of a sudden war breaks out, or that expectation's gone. So what I'm seeing at the moment is that this uncertainty, it means that people are looking for certainty. And there are ways that small businesses can create some uncertainty to remove the volatility in the exchange rate. So you can't control where it's going to go, but you can control how you react to what's happening in the market.
Okay.
Depends on what Donald Trump wakes up one morning and says or does, or what happens with Israel and so forth at the moment, are the real topical themes.
Yes.
And I said, we can't control that, but we can take steps to protect our profit margin.
Yeah. Okay. So, I mean, so what are some of those steps? Like for people listening who are, like, they might be buying product from China or Taiwan and USD and bringing it into Australia, and they've got AUD, or they're selling in the UK and Europe as well. Like, what are some of the steps that they can be thinking about, at least to minimize that risk and the volatility?
Yeah. So, I mean, usually when businesses are a bit smaller and they're starting out, they don't think about this till a bit later or until there's a big move that impacts their profit margins. If you're importing, I think one of the first things you want to do is negotiate some credit terms with your suppliers.
Right. Yeah.
So that's a given, and then a lot of people tell you to do that. But what's the impact of that? So the impact of that is that you might pay 20 or 30% deposit today, but then you've got another invoice to pay in 60 or 90 days' time, depending on your credit terms.
Yeah.
Of course, the exchange rate can move a lot between now and then, right? So what you can do, though, is almost lock in today's rate for that future payment.
Right.
So you know exactly in 90 days' time what that foreign currency is going to cost you in today's terms.
Right.
So that's known as a hedge,
or
taking a forward contract out. And that's something that helps businesses sleep easy, knowing that that invoice is covered and that my profit margin, my cost of goods sold is protected.
Right.
No matter what happens to the exchange rate, I've got certainty over my cost. So that's one thing that businesses can do to protect from an import supply chain perspective.
Just one quick question on that. Is it like if you've got, do you need to be doing big numbers to make that matter, or how, what would be as small as you would make sense to do that?
Look, it depends on the business model. I mean, there's no minimums with us. Some banks and providers may have a minimum amount that you can do, not with us. But if you look at just more recently, the exchange rate, the Aussie dollar fell below 60 cents in April and then bounced back to 65.5. So it had roughly a 10% swing within a month.
Yeah, correct.
So if you're an importer and your invoice happens to fall during that period and you're taking 60 cents, well, that's just cost you maybe 10 cents.
Yeah.
But there's no minimum amounts. I think, if you want to save or have certainty on that profit margin, then it doesn't really matter whether it's 10,000 or 10 million.
Yeah. Yeah. Okay. No, that's really good advice.
I'll just add, you mentioned there about selling overseas, and obviously the example I gave was around importing.
Yeah.
But of course, if you're selling overseas and you're receiving foreign currency, that sales revenue and your profit margin is also at risk, because the same thing can happen. So if you sell a product today, how do you know how many Australian dollars or New Zealand dollars you're going to end up with in the future? You can also do the same thing on a forward.
Oh, okay.
To hedge your sales revenue, so you know exactly how much you're going to receive once you sell your goods.
Yeah. Okay. So these are things to be considering and times that we are now with this volatility. Okay. So now to give people a bit of context about WorldFirst, with my bank in New Zealand, and anytime I wanted to do a foreign payment, it would be $20 or maybe 25. They would generously drop down to 20, and then they would take a 2.5 or 2.8% clip on the way through as well, and it would end up costing, every month it was thousands of dollars in bank fees, pretty much that were happening. And so, can you just give people an understanding of where does WorldFirst fit in, and are you taking the place of big banks, or are you, how does that all work? Just give some context for people.
Yeah, so we are an alternative to using a bank. Certainly, every business owner has a bank account and a bank relationship, so it's quite common and easy as a first step when you have to, pay an overseas supplier to use your bank because you've already got that account. The fees are transparent in terms of your telegraphic transfer or TT fees, that $20 you were talking about.
Yeah. That
you can see. What you can't necessarily see is what the hidden FX margin is. So you see an exchange rate and you take that rate, make that payment, but built into that rate is a margin. So we operate off the same principles like a bank, in that we also have a margin that we pass on in the rate, but we're more transparent, I guess, with that margin. And so customers can see that on our website. When they get a quote, they can see where the market's at, and they can see that, have that level of transparency around that. So we work alongside the banks. We rely and use the banking networks as well. But if you think about the banks, their costs and their cost of servicing and providing these products to small businesses, the profit margins aren't quite there for them. So for them to sustain those profit margins, they tend to pass on larger fees and margins to be able to provide the product and service. Whereas as a fintech or a non-bank provider, we keep our costs down. We use technology to deliver the service, but we also have that human element of relationship management as well. So we can afford to sort of charge lower margins and low or no fees, depending on the circumstance of the bank.
Yeah, nice. Okay. And so then with WorldFirst, you, with WorldFirst, I open up my US bank account. It's not the WorldFirst bank account. You work alongside big banks. Yeah. So when I look at it, it'll be Bank of America or, for example.
Yeah, definitely. So WorldFirst, in its essence, the account is a multi-currency account. So at a click of a button, you can open up a local bank account in a foreign country that you can then use to collect like a local, which gives you that, puts you on a level playing field with your competition in that market. Yeah, we work with your Citibanks, JP Morgans, and tier one multinational banks. And so for them, it's not necessarily outsourcing it, but rather than having a direct relationship with the small business, we have the relationship, and then they get the economies of scale by having someone like us deliver the service to them. And the benefit there for the business owner and for the brand is that instead of having to rock into a physical branch or create an LLC in the US, for example, you can do it from here at a click of a button. And we issue you an account verification letter, which actually is in your company name with local US dollar bank account details that then you can upload into Amazon as part of that verification process to create your Amazon store. You need to load bank account details. So instead of loading your Australian dollar bank account details, which I'll come to a little bit later, but there's some hidden fees in that as well. You can actually just load a WorldFirst US dollar account into Amazon and you start collecting and holding US dollars. And there are other benefits with that approach as well. But that's where we fit in terms of offering those foreign currency accounts that can be used to collect from over 100 marketplaces around the world. Actually.
That was the initial foray. I recall is like getting money off the Amazon marketplace. This is like 10 plus years ago now. Amazon was like the banks; they were taking their commission on the way through, right, and pretty chunky. So it would they were even more. I think they were at least 3%, and so that was then. But if you paid it into a USD actual local bank account, then you didn't have that, and you've got automatic margin gain right there. So
you've got margin gain out there, and the other thing is you can avoid some unnecessary conversion. Because if you're paying your suppliers in US dollars and you're selling in US dollars, then why have those funds converted?
Oh, you convert twice, right?
Exactly.
And then so it's nearly 5%.
The double conversion trap, as we call it, right? You convert it and you don't even know that you're paying it sometimes because you just see Aussie dollars in your account. No, that's right. And so that was a mistake I was making. And so what other kind of mistakes do you see people making with foreign currency? That's probably the biggest one, the first mistake. And it's easy and it's understandable, especially for an e-com brand as they're growing. They've got a lot of other things to worry about. So usually this is one of the last things that people think about, which is the most common mistake. It shouldn't be an afterthought, but I understand why it is. Because there is marketing, the fulfillment piece, and getting customers and product quality and all those things that an e-com brand needs to focus on are at the forefront. So I would say that's probably the biggest one. It's an afterthought. And what that means is that then there are these hidden fees and hidden costs that a lot of business owners don't even know that they're wearing. The second one I would say is around the expense management piece. And I think a lot of business owners tend to put a lot of expenses onto a credit card. Again, easy, convenient. I've got a credit card. It's linked to my bank account. So why wouldn't I? And maybe I'll like points if I get some reward points with that credit card, then I can see the reason why people do it. But again, that's a very high cost
because you're paying
solution.
another percentage on top.
You're paying more than that 2%. You're probably paying 3 or 4%. If for example you're paying Google, Meta, or Amazon ads in a foreign currency, then you use your credit card.
Software as well, right? We've got
subscriptions,
tons of that.
All of those expenses usually costing you 3% or more, and that's another cost that businesses don't really think about. So those two things combined can help save 5 or 10% maybe. And if you think about trying to get that saving in other areas of your business, trying to sort of find that saving in your advertising costs, or trying to find that saving in negotiate that from your suppliers, right? It's hard work. But it's sitting there right in front of e-com brands sometimes, and they don't even know about it.
No, that's interesting. I mean, there's tens of thousands of dollars, right? That can easily sneak up on you. And so, what about other payments? Like, let's talk suppliers. I was talking before. I got caught where my supplier got an email from their actual account saying, "Hey, look, we're back then," but we're like, "Okay, and what is it from here?" Yeah, it's from here. And then we make the payment. It wasn't big, but still 10 grand. It was still enough at the time, and then we get an email from them going, our emails got hacked. This is the supplier in China. And then we were like, oh, crap. But luckily, for whatever reason, the bank in New Zealand we were with at that time got into action, managed to get that back. So that was kind of lucky. But so do you see that kind of mistake, and how do people avoid that type of mistake or other ones?
Yeah, I mean, fraudsters are getting cleverer and cleverer.
Right.
It's definitely something that, in our personal lives, with all sorts of breaches going on with big organisations that we're becoming more and more aware of. And I think what we see is that businesses are becoming more savvy in today's environment because of that, because it touches their private life as well as their business life. So you're not lucky, but maybe you must have acted quite quickly to stop that, because once the funds sometimes are hidden account, especially with cross-border in a different country, and they've left the receiving bank account, they can be hard to get back.
Yeah.
So we always urge clients to get an email, to call them, or use multi-factor authentication. So a lot of the times you're communicating on WeChat or WhatsApp or another element. Just double check on a separate element with your contact whether that's correct before you sort of make those changes. That'd be one piece of advice I'd give. Yeah. Secondly, in terms of your two-factor authentication I spoke about before, that's a given now.
Yeah.
Like if you don't have that in place, you should. And then depending on the platform you use, there can be segregation of duties. You have your accountant performing some function, maybe yourself performing another, and you can actually have two heads looking at it rather than just one, which then can often give a different perspective or raise questions. Yeah. Which you can then intervene and maybe make some changes. And then the last one I would say is around, if you're going to use a non-bank provider, there's a couple of things you should be looking for. Yeah. To best ensure that your funds are safe. And that's, I know, a concern sometimes with e-com brand owners have in moving away from a bank. I know I pay more, but I feel safer because I'm using a bank. And we love to hate the banks. But that's one thing people love about the banks, right? They feel safer. But not all non-banks are risky, is the only thing I'd say, in that there's a certain safeguards that should be put in place if you're using a non-bank. One of those, which is a bit of a given, is that should be registered with, in Australia, ASIC. Yes. So Australian Securities Investment Commission have a license which actually has a lot of regulation and compliance attached to it. And the second part to that is holding segregated funds. We hold customer funds in a segregated account. So what that means is that they're not commingled into the same operating account as us. So even if the non-bank provider was to go bust, those funds are safeguarded and kept. Your funds are not kept and not at risk in that case. You still sort of get access to those funds. And then the third part is that those funds are held with a Tier 1 global bank. Yes. So really, for you to lose your funds, you'd need a couple of things to happen at the same time. You'd need the provider to go bust, and you need the bank, the Tier 1 bank to go bust at the same time, which is kind of rare, but can happen. I remember a couple of years ago, those that may remember Silicon Valley Bank in the US. That was a mad frenzy in the market at the time, and people were asking.
But were they Tier 1 though?
They weren't a Tier 1. They weren't a Tier 1, and they weren't using Tier 1 wholesale banks in the back end either. But that raised alarm from a lot of small business owners. And unfortunately, some businesses did lose some money during that whole process. But if they weren't a Tier 1, they weren't regulated in the same way that, say, ASIC regulates banks, for example. And so, you make sure that there's protections in place there if you're going to move away from your bank to make sure that your money is safe. Yeah.
Okay. No, that makes sense. And then also from a payments point of view, how does WorldFirst help there? Like we talked before about you get paid from Amazon into your USD account, and then you can align to pay your supplier in the USD without even having to shift it.
Yeah, that's right. So the more if you think about a multi-currency account as a solution, you might sell on Amazon in a few different markets. You might have, like you said before, Europe account. And so through one single sign-on, you can move funds instantly cross-border from one wallet, if you like, to another. Yeah. So I need more US dollars because I have to pay my supplier. I've got some pounds or some euro. Click of a button, they're there straight away. I can pay out my supplier. And for us, our pay to China capability is actually really, really strong. So 90% of our payments are done same day, received in China by the manufacturer same day.
Amazing.
Which is important for e-com brands because obviously the quicker they can receive payment, the quicker they can ship the goods to you.
Correct. Yeah, that's right.
And you can fulfill your customers. That's right. Especially during peak periods, right?
Yeah.
Coming up like Prime. And so forth on Amazon, that speed of pay is very important. So one account, single sign-on, real-time cross-border, if you like, in terms of getting funds from one currency to another, and then paying your suppliers, and then converting and repatriating those funds back home into Australian dollars, which you can then withdraw into your bank account.
Right.
And you just connect that through. And all of that's actually comes with a Xero and NetSuite integration.
Right.
So
Okay.
for reconciliation purposes,
Yes.
it makes that much easier for your accountant
Yeah.
and your finance team at the end of the day to marry up all those invoices with the sales revenue, and that's all captured into zero.
Yeah. So that's really how people use it, right? So they're making sure they're getting paid in the foreign currency, expenses they have or suppliers in USD, for example. That's because often what it is,
Yes.
they're getting paid, and then the balance they kind of get shifted into the main bank for normal OPEX and
That's
tax
right.
and all that.
That's right. I mean, there are more
things
and
there.
more expenses you
That's
can pay. I mean, we have a card powered by MasterCard for expense management. So yeah, some businesses still retain AUD balances within our account, maybe if they've got local expenses to pay and they put it on their card. But yeah, ultimately you can just withdraw them into your day-to-day bank account.
Yeah, excellent. So just shifting gears a little bit, Jim, and like you're in an interesting position where you're getting around the country and the world, like even up into Asia. Like, what trends are you seeing in e-commerce in Australia for a start? Yeah, how's it? Do you think it's going well, growing? What do you think?
It's interesting, isn't it? Obviously, there's a lot always been mentioned about the post-COVID sort of boom and pullback, but the growth's still there in terms of what we're seeing. More and more e-commerce brand owners looking to diversify the channels in which they sell domestically as well as cross-border. And those channels are there are more and more channels for them to sell online. Whereas previously, there might have been much more limited. Now we're seeing competition from other marketplaces as well, trying to tackle Amazon. Amazon's still number one and still holds the dominant position. But I think what we're seeing is that it's no longer a one-trick pony, if you like, in the market here, especially if you want to grow a brand.
Yes.
And as all these platforms capture more and more traffic, the consumer is much more aware, and they're looking at multi-channels. So, they might be on Amazon, but they might also be on Temu, or they on Instagram or TikTok, right? They're being bombarded with all these choices, right? And they're seeing brands come in front of them. So I think that's one of the things we are seeing. We're seeing definitely, you probably see it more than me, the driving cost in ad spend, in cost of ads is going up because of this whole phenomenon of this competition for brand and to get in front of the consumer is driving some of these prices up. So marketing costs are going up, which makes it much more challenging. And so we're seeing, obviously, it's the role of social media play in terms of the social media platforms, playing a more dominant role in sort of how e-com brands are promoting themselves. And that, I think, is going to continue. Certainly more and more. So Temu now is looking to recruit Australian sellers.
I've been
which
seeing
is a big thing. Let's talk about Shein doing the same at some point down the track. It's TikTok Shop going to come here. Like, the competition is getting pretty fierce,
isn't it?
I like what Amazon are doing though with some of their new features and new products, like Amazon Send. For those that don't know what that's about, that's a really good.
So you can, you don't have to send your product into Amazon's warehouses. You can send it from yours.
Well, from China
and
into Australia.
Oh, sorry, of course, So that's right.
It's it's a really, you don't have to have your own warehouse over there in China. They can do the whole, like an FBA, but from China warehouse to Australia, all the way through.
Yeah, of course.
So that really helps solve some fulfillment problems, and we've partnered with Amazon on a couple of events, and certainly the feedback we've seen from sellers that have been in the room of those discussions has been quite positive. The second thing is they've just recently launched their business program.
Yes,
so
that's
another, I guess, a lower hanging fruit, which sellers can take advantage of. Which helps again create more stickiness and repeat business for Amazon.
Yes.
Which is something that we're seeing. It's only in its infancies in Australia. Obviously, it's been around in the US for a lot longer. But domestically, from a marketplace perspective, there's some of the things that we're seeing.
And what about those brands that are doing really well? Like, what do you, of what you know, like, what are they doing well? Those brands that others could learn from.
Sure. I mean, it's this competition is fierce, right? And there are some brands that are cutting above and getting that above the noise, for want of a better term. So one of those that we deal with, that we work with, Oz Hair and Beauty, seems to be cutting through a lot of that noise. And it's an interesting business model that they're going for at the moment, bucking a bit of the trend. This omni-channel growth is probably where they're at, where we see a lot of retail businesses closing down. Businesses like theirs are actually opening more and more stores. W Supply is another one, the cosmetics and hair and beauty range. Those industries tend to be going the other direction and actually expanding offline.
Yes.
But it works because they've got a strong online presence in the first place. So taking that customer experience from an online to an offline and making it seamless, so the customer gets served how they want to be served. Both on and offline. That whole experience is. There are some companies that are doing that well. It's expensive. To me, it's a brand exercise, and the channels tend to complement each other. But I think one of the mistakes some businesses make is they measure those channels independently. And if you just look at the financials of the physical store, they go, "It's not worth it. Why would I do that?" But those are strategic placements in high traffic areas. They serve two purposes. One is for brand, the other one is for fulfillment.
Yes.
And so setting up these regional fulfillment distribution centers is something that Oz Hair and Beauty has done quite well, successfully. So then the second part is some of these traditional retailers are turning their online stores into marketplaces. JB Hi-Fi is probably the most recent example, and more high profile one. So we're seeing more and more retailers
Bunnings,
at that.
Maya.
Just third-party sellers, right? So, coming back to the earlier question, it gives sellers, again, more options.
Yes.
Creates new challenges. How do you manage,
That's right.
30 different channels in the one market is another discussion, but the choice is there, and that seems to be that's happening as well. So that also opens up more foreign sellers coming into the market. So, more and more Chinese sellers competing with Australian sellers, right? So that is another trend that I'm sure your listeners are aware of and experiencing, right? So omni-channel, expanding online more marketplaces, probably the two things, and brands like Oz Hair and Beauty, W Supply, they seem to be cutting across both quite well.
Yeah, there is that rising tide lifts all boats, right? And that cross-pollination, that the halo effect definitely is a factor. And I like that call of not looking at one channel in isolation, because I think that's a big mistake that people make. Everyone wants everything they do to be profitable, but they don't give it credit for the other benefits, as you say, of delivery or brand awareness that spills into
that halo effect, right? It's hard to measure, right? Everyone wants to see ROI at a campaign level, right? So
that's right.
Some of these things are a bit harder to measure.
Yeah, definitely. And what about going global, right? That's another aspect. And do you see Australian brands getting into China as an option, or is it too hard, or what do you think? I know that's a bit of a big question, but
it's complex, right? And there's two methods for which you can, and one is harder than the other. A cross-border e-commerce makes it much easier for Australian brands to sell into China online. If you want to do general trade, that's a different beast altogether. And the Australian brand resonates quite well, but depending on the industry you're in, the red tape in terms of and the bureaucracies that you have to do general trade makes it really unachievable for a lot of the smaller brands. And that's why distributors or third parties are quite common for foreign brands selling into China. I think other parts of Southeast Asia, though, there's a big boom going on.
Right.
So we're seeing a lot of increase. We've opened our offices ourselves across Vietnam, Thailand, Philippines, Malaysia. It's like Southeast Asia itself is actually booming. And so, I think and each market has its own complexities. So, they're not necessarily all easier than China.
No.
But there are other markets outside China throughout Southeast Asia that sellers could look at. Singapore's probably the most easiest that we find that many sellers go to, but even closer to home, you've got Australia and New Zealand, right?
That's
you're not selling in one of those, in both of those, before you go out into Asia. You should be. But China's a difficult one. But cross-border e-commerce platforms like Tmall do make it easier for you to list and test in an online environment. Certainly the general trade's a lot harder.
A lot tougher, isn't it?
With what's happened with the tariffs, obviously in the US, there's a much bigger boom going on in Europe. At the moment, and the UK, as well as Southeast Asia. They're more complex tax markets as well. The tax regime
side
the compliance side is
puts a lot of people off.
There are partners that we work with.
That's right.
Help businesses who are looking to get into Europe.
Amazing. Very good. Well, what have we not covered? Any other thoughts that would be useful for listeners?
I mean, we've covered a lot of ground, but expense management is something that we touched on before. And I think one of the things around saving money on your ad spend by not using a credit card is using a product, and we've got one, so shameless plug here, but World Card for us is actually allows you to use your foreign currency, the funds in your foreign currency account, to pay expenses in that currency without actually having to convert.
Perfect.
So I mentioned before about having a US dollar account, sales revenue going in, paying suppliers, but linking a card to that account as well means there's zero FX costs.
Perfect.
In 15 different currencies. And we actually pay a 1% cashback too. And that 1% cashback, if you think about your ad spend, if you're getting 4 or 5 times ROAS, and you could add another 1% into that, then that 1% investment is like 5, right? So you can really use a product like that, not just to save money, but to fuel your growth and acquire more customers by reinvesting those proceeds back into your marketing. So I think that's an interesting thing we're seeing with some of our customers that are leveraging that product to try and boost their ad spend, especially as it's getting more expensive, as I said before.
Yeah, fantastic. So, look, if people wanted to get hold of WorldFirst to have a look, what's the best way to do that?
Our website, worldfirst.com.au. You can hit me up on LinkedIn. Jim Vrondas on LinkedIn.
That's right. So we'll put that in the show notes. So we'll put that WorldFirst link in there, and Jim's LinkedIn profile as well.
Thank you.
But hey, look, that's been fascinating. Just getting your perspective on what is happening in the world. There's volatility at the moment, but there's also pockets of positivity and just real growth that's happening from an e-com point of view and marketplaces and for brands. There's always opportunity, and it is for many companies you've got limited time, limited resources often, and so it's how do you make those resources go further, and just being smart about how you do that, and saving on a lot of these forex costs that can happen, and even avoiding mistakes like I made with paying. But there's opportunities there. There is growth as more. The trend is e-commerce is only growing, right? And whether that's in Australia, Amazon's been growing. All the marketplaces are growing, and overseas there's big opportunities. To say if you look around for the right countries that are the right fit, for your brand and products, then there's always opportunity there. So that's wonderful. Thanks, Jim.
Definitely
appreciate it.
Thank you.
Okay,
thanks for having me.
All the best, and so thanks for tuning into this TACOS Tuesday. If you like, subscribe, and comment, that would be amazing. We do appreciate it. Thanks very much. All the best.